Photos are done. Okay, thank you. Thank you. Let's start. Yogesh, thank you.
Hello and welcome to this post-policy press conference of the Reserve Bank of India. Today we have with us Honorable Governor Shri Shaktikantadas, respected Deputy Governors Dr. M.D. Patra, Shri M. Rajeshwar Rao, Shri T. Ravi Shankar, and joining us for the first time is Mr. Swaminathan J., Deputy Governor. It is his first press conference in the RBI. Also with us are today Dr. O.P. Mal, Executive Director, and Dr. Rajiv Ranjan, besides my colleague Munish Kapoor. As is the norm, I will request Sir first to give his opening remarks, and then I'll call out the names for asking the question. Over to you, sir.
Thank you. Thank you, Yogesh. Welcome. I would like to extend at the outset my welcome to all the representatives from the press, from the media. You have already heard the detailed statement and you have had time to go through the statement and the resolution and the announcements. So let me just summarize basically what I have already stated. Nothing new, but just to summarize as to what is the overall thrust of this monetary policy statement. First, India is emerging as the new growth engine for the world. In a highly volatile and uncertain world, India is standing out for its resilience and stability. That's the first point I would like to say. Second, monetary policy has made significant progress towards price stability. The recent spike in CPI inflation, as I have already stated in the policy statement and even in the resolution, the recent spike in the CPI inflation caused due to the factors which have been spelled out. So the recent spike in CPI inflation is expected to be short-lived, going by past trends. In such situations, we need to remain watchful and not resort to any knee-jerk reactions. Now, if these spikes, these idiosyncrasies in CPI inflation, particularly food inflation in particular, shows signs of getting generalized, then we may have to act. And then we have to act, and this is what I have also said it in the statement, and we have to go beyond maintaining Arjuna's eye to undertaking actual policy, to deploy actual policy instruments. And let's remember in this context that deployment of policy instruments are not just in terms of rate and stance, there are other ways of dealing with it. We have done a bit with regard to the incremental CRR today. The third point is with regard to incremental CRR. This was considered necessary in the background of the liquidity overhang. It's desirable, we considered it desirable in the interest of price stability and financial stability. It will have an impact on the inflation situation also. And as I said, it's a purely temporary measure and it will be reviewed on 8th September or earlier. We will ensure, as we have said, that there is adequate liquidity available in the system to meet the credit needs of the economy. We have done our internal assessment. If you recall, I paused during the statement and I said that we have done our internal assessment, and our assessment show that there will still be adequate liquidity left with the banking system to undertake their, maintain their lending activities which they have been doing. And let me also add that we are sensitive to the cash requirements ahead of the festival season, which should be kicking in, let's say, in the latter part of September or early October. On the liquidity situation, let me add that there are at times pressures on liquidity due to overall there is surplus because of particularly because of the withdrawal of 2000 rupee banknotes, with 87% of it coming as bank deposits. So obviously there is a, there is a liquidity overhang, there is a liquidity excess that had to be dealt with. But even with that, there are periods when, as we have seen in the past, and as we may see even in the coming months, that there could be pressures on liquidity, especially in situations or at times when liquidity held in the system goes into the government coffers at the time of the tax payments. And this happens particularly around the time when advance tax payments are made with regard to direct taxes, or 20th of every month when the GST inflows also happen. But we have seen in the past that, but after a few days, it returns to the system because the government expenditure ensures that the money comes back into the system. So there are temporary pressure times on the liquidity situation, which lasts for about maximum 3 to 4 days. And not beyond that, sometimes maybe 5 days, but it goes back into the system. And so this was on the ICC, on the incremental CRR and on the liquidity situation, what I wanted to say. This was the third point. The fourth point is the financial stability, the financial sector stability is well maintained. Stability is a public good, and market participants and financial institutions have an equal share in preserving financial stability. We from the RBI look forward to their cooperation in this regard. The final point, the fifth point, is that the external sector is also resilient. Forex buffers are strong. The umbrella has gained further strength, and that gives a lot of confidence and comfort to the market. I'll stop here. Thank you.
Thank you, sir, for those opening remarks. I'll invite Mr. Mayur Shetty from the Times of India to ask his question.
Thank you, Yogesh. Governor, sir, you had announced some measures on UPI allowing tap and pay and conversational payments. Also, since the last policy, there have been some bilateral agreements signed between RBI and other governments for integration of domestic payment systems and rupee invoicing. So when will users actually get to see this on the ground happening?
No, with regard to UPI linkage, we have already done it for Singapore. And so far as the RuPay card is concerned, it is already in, it is used in a few other countries, you are aware. Recently, we have signed an MOU with the UAE, whereby we are going to link our UPI with their PPI system. They call it PPI. That is work in progress, and it will happen in the coming months. And discussions are underway with a few other countries also for linkage of the payment systems, and including some advanced economies who have evinced interest in linking to UPI. The UPI has now become internationally recognized as it is recognized by others. I am not saying it myself, but it is recognized very widely that it is perhaps the most efficient and advanced payment system in the world. And this is something which I am saying on the basis of our G20 meetings, the finance ministers and governors meeting, which was held recently and even earlier. So this is work in progress. We are already in discussion with a few other countries, and it will happen.
Thank you, sir, for that answer. I'll invite Anushka Kayastha from the Hindu Business Line to ask a question.
Good afternoon, sir. So I wanted to understand the
just
RBI
one correction. I think the UAE system is called IPP. I said PPI, it is IPP. Thanks.
So the
Integrated Payment Platform, that is the, yeah.
The statement said that the RBI will review the reset of floating rate loans due to unreasonable elongation. I wanted to understand, how do you define unreasonable elongation given the 250 bips rate hike by the central bank so far?
I would request Deputy Governor Rajeshwar Rao to take that question.
No, I think We are not considering defining an unreasonable elongation. It's something which the board will have to consider, having regard to the the tenor and the repayment capacity of the individual borrowers. It is up to the board to decide what is a reasonable tenure, increasing that beyond a particular period would be deemed as unreasonable. But it is left to the individual institution to define it. We will not be defining.
As per them, as in the elongation, it would be because they are floating rate, is market linked. So how do you then, what are the parameters that you look at?
We have already discussed this with the CEOs of the banks, and we have conveyed our concerns and what action we expect them to take. I think we will stop it with that. Don't think we'll like to clarify.
You see, if I may add, this is something which, as the Deputy Governor is pointing it out, this is something which the banks will have to assess, taking into account the payment capacity of the borrower and how long his payment capacity is lasting. It is something which he has to also, the banks have to take into consideration the age factor. It will vary from individual to individual, the age factor, the payment capacity. And also it is necessary that, to avoid unduly long elongation, which sometimes may, going forward, camouflage and underlying stress in a particular loan. So therefore, the extension of tenor has to be for a reasonable period. We don't want to define it. It is something, it's a commercial decision of the banks, which the banks, as the Deputy Governor has pointed out, the banks and their boards will have to assess and a decision. It's a commercial decision which the banks have to take. We are just providing some broad guidelines.
It will be on a case-to-case basis then.
You wait for the circular.
Okay.
You wait for the circular.
Thank you, sirs. अब मैं आमंत्रित करूंगा स्वाति खंडेलवाल from Z Business News.
थैंक यू योगेश, थैंक यू गवर्नर. आपने कहा अपने स्टेटमेंट में कि बैलेंस शीट्स कंपनीज की बहुत स्ट्रॉन्ग है, रोबस्ट है, इंडिया एक रेजिलिएंट इकोनॉमी की तरह उभर के आ रहा है. प्राइवेट कैपेक्स अभी भी कंसर्न है जब हम बात करते हैं. इसको कैसे आप एड्रेस करेंगे और क्यों ये नहीं अभी तक हो पा रहा है, इसकी कितनी चिंता है आरबीआई को?
इसे जैसे कि लास्ट फाइनेंशियल स्टेबिलिटी रिपोर्ट के फॉरवर्ड में मैंने लिखा था कि ये जो सिचुएशन है इसमें एट द मोमेंट देयर इज अ ट्विन बैलेंस शीट एडवांटेज. द बैलेंस शीट, बैंकों के बैलेंस शीट और कॉर्पोरेट्स के बैलेंस शीट दोनों स्ट्रांग है. सो इस समय पर और बैंक के जो मतलब जो कॉर्पोरेट बैलेंस शीट है वो भी काफ़ी डीलेवरेज्ड है. तो इन्वेस्टमेंट के लिए उनमें काफ़ी फैसिलिटी, देयर इज स्पेस फॉर मेकिंग इन्वेस्टमेंट. बाकी तो ये इंडिविजुअल कंपनीज के ऊपर डिपेंड करते हैं. बट मैंने स्टेटमेंट में बहुत क्लियरली कहा कि इन्वेस्टमेंट, जो प्राइवेट इन्वेस्टमेंट है, अभी वो सिलेक्ट क्रिटिकल सेक्टर में, सम की सेक्टर्स में इट इज़ हैपनिंग. और मैंने फुटनोट में स्पेल आउट किया है कौन सा सेक्टर में वो इन्वेस्टमेंट अभी हो रहा है. की सेक्टर्स जिसमें कि मैं कह सकता हूँ कि आयरन एंड स्टील हो, ऑटोमोबाइल्स हो, पेट्रोलियम सेक्टर हो, और मेटल्स में है, केमिकल्स सेक्टर में. सो काफ़ी सेक्टर में, की सेक्टर में अभी इन्वेस्टमेंट इट्स हैपनिंग. सो देयरफॉर गोइंग फॉरवर्ड इट शुड हैपन इन अदर सेक्टर्स, क्योंकि द ग्राउंड कंडीशंस आर favorable for investment.
Thank you, Governor.
धन्यवाद sir. Now I'll move on to Lata Venkatesh from CNBC TV18.
Thank you, Yogesh. So, a couple of questions on the CRR. Can you tell us exactly how much more CRR will have to be maintained? I'm getting calculations from 95,000 crore to 1 trillion to even 1.1 trillion. What exactly is the extra? Some part of the extra...
You are not very much off the mark with regard to that calculation which you mentioned.
No, but 95, 1.1 is 15,000 crores, sir.
So you are not very much off the mark, but I'll reply to your question.
Sure.
Yeah.
And some part of the increase in July 19 is because HDFC got merged. Now, your purpose is to actually remove the 2,000 crore rupee, related liquidity. So will you adjust for the HDFC related increase? And will the calculation be net of that? And the other point is when you say 10%, you have to pay a base 4.5 plus 10%, right? That 10% doesn't include the 4.5, so the increase is a net 5.5. How should you calculate?
No, we have done the internal calculation. We have done a bank-wise calculation also, and it will be a little above 1 lakh crore. Let me mention it that way. We have an exact number in our mind, but I don't want to say it because this NDTL figure calculation, it requires further fine-tuning, but it will be a little higher than 1 lakh crore. And it's applicable, this incremental CRR is applicable to all scheduled banks. That will include,
So you're not
all
netting
scheduled
HDFC
banks. And no, it is applicable to all banks. I cannot say X and X is included or not included, but it is applicable to all scheduled banks.
Okay. Now, just to add, even though the extra liquidity, surplus, sustainable or endurable liquidity is, what's the word you use, is 3.5 trillion, the weighted average call rate is behaving itself. It's almost always hugging the repo rate. So what is your comfort figure? The banks complain that they also have to keep excess liquidity because of NEFT. So what is your discomfort figure? And separately, what will you consider when you tweak it on September 8th, separately, the CRR? Will you remove it on September 8th? If not, what will you consider?
No, September 8 will depend on the situation prevailing at that time. In between, so many things are there. The GST payments will happen. The government expenditures will happen. We have to watch the credit offtake from the banking sector also. So I cannot prejudge what we will do on September 8. But yes, we will review it on September 8 or even earlier. That is what I have mentioned. As regards the liquidity, it's a very dynamic number. You cannot say that this is the level of liquidity I want to take it out, because it is a dynamic figure. It will depend on so many factors. It will depend on what is your growth rate. It will depend on what is your inflation number. So it's a dynamic figure, and it's not possible and not desirable also to give a particular number, because it undergoes constant change. We are always nimble in our liquidity actions. You would have seen in the past, we have the main operation of 14-day VRRR. As and when required, we have undertaken fine-tuning VRRR operations. As and when required, we have also undertaken fine-tuning repo operations, but whereby repo has been injected. So we monitor this situation constantly, and there have been two-way interventions which we have done in the past. We are very nimble, and so far as the level of liquidity, it's a dynamic figure. I would not like to venture into giving a particular number.
It's nothing like a comfort neutral factor.
I think we'll discuss on the offline mode, but it's a dynamic figure. You cannot really say that this is a comfortable figure. Yeah.
Thank you, sir. We'll move on to this side of the room now. I'll invite Mr. Manojit Saha from Business Standard to ask his question.
Good afternoon, sir. Despite your repeated assertions, the actual inflation and the 4% is still very far. Are you getting anxious about it? And when you are going to act on it before, how long you are going to wait before getting act on it?
I think I will I'll request DG Michael Patra to take that question.
So if you recall, in May, the inflation rate actually aligned with the target. And 4.3 is a comfortable level of the inflation rate. But then these food shocks came, which are unpredictable, and their period of stay is also unpredictable. We hope that these are transitory phenomena, and they will come off when supplies improve, and they are improving already. So that's the feeling. It's just that there have been these food shocks which were unanticipated, and we will see them off.
So barring the food shocks, the inflation would have been aligned with the transitory. That was your expectation?
Thank you, sirs. I'll move on to Mr. Piyush Shukla from the Financial Express.
Good afternoon, Governor. Firstly, wanted to check on when should we expect the final ECL norms to kick in? And secondly, sir, in the last MPC, former DG Jain had said that we will be issuing a fraud classification circular soon. Is there any update on that front? Thank you.
On the ECL part, I would request DG Rajeshwar Rao to reply, and on the fraud classification, I would request DG Swaminathan to reply.
The ECL circular, as we have said, there have been several inputs which have come in. Some are technical issues which need to be examined. So it will take some more time before the measures are rolled out. So I think I can't give a definite timeline at this point, but it will take some more time to finalize the measures.
Yeah. On the master direction on fraud identification and reporting, the circular is under works, and we are doing a wider stakeholder consultation, government, vigilance, law enforcement. There are the other stakeholders with whom we are under consultation at this point in time, and we would be coming out with these guidelines very shortly.
Thank you, sirs. Now I'll move on to Mr. Anup Roy from the Bloomberg.
Thank you, sir. Sir, is Russia investing in Indian government bonds and T-bills, and how much that could be? How much the investment could have been by now, and is there any liquidity implication for that when they mature, especially after this ICRR? Thank you.
I think Deputy Governor Ravi Shankar can take that question.
Obviously, we can't say specifically about a country or any particular entity investing in government securities. It is allowed through the FPI route. It can happen through the FPI route. It is allowed through the special Vostro account route. So the actual investments will happen only through these two routes. So about how much anyone has invested and how much exactly, that's not something that we can say out publicly. Thank you.
Will there be any liquidity?
Sorry?
Will there be any liquidity implication when they mature?
Will there be a liquidity implication of that? We'll have to see. It is basically within the system, the rupee balances within the system, buying instruments, within the system, should not have any significant liquidity impact.
Thank you, sir. I'll move on to Swati Bhatt Chete from Reuters.
Thank you, sir. So you repeated again today that the 14-day VRRR remains the primary mode. But in your statement, you also said that the market has been reluctant to park long-term funds. Are you actively considering moving back to a shorter framework? I mean, the daily operations. Is that something that is likely to be more effective in managing liquidity? Because we are constantly seeing RBI coming and announcing VRRRs, but the offtake is hardly anything. So is there a rethink on the liquidity framework from your side? Thank you.
No, I have said that the response could have been better to the 14-day VRRR auction, which is the main auction, and that will be continued. In fact, today I think about 93,000 crores of VRRR will get released today, and it will come up for VRRR auction later during today. So VRRR being the main operation will continue. There is no proposal, no thinking to go back to doing it on a daily basis. We have undertaken fine-tuning operations on the VRRR side. We have done even a one-day operation at one point of time. 1 day, 2 days, 3 days, 4 days we have done. But I have very clearly said that these are done in exceptional situations and cannot become the rule. So therefore it will be incorrect to expect that this will be a, fine-tuning will be a regular feature. Fine-tuning will be only for exceptional situations.
Thank you, sir. I'll move on to Ankur Mishra from ET Now.
So just wanted your sense on ICRR. When you will be meeting on 8th of September or before, the considerations will be limited to this ICRR only, or other options of liquidity might also be considered, including CRR? As 87% of the banknotes, as you said, has already been come. So just wanted to get a sense on that.
I think DG Michael Patra can reply.
I just want to, we are not meeting, don't ascribe it to an MPC meeting or anything. It's just a review that we will do and assess the demand supply situation in terms of liquidity and take a view.
And liquidity decisions are an internal decision of the RBI. It's not an MPC decision. So therefore, it's a constant process, you know. So around that time we will review, and it's a internal review. So.
Thank you, sir. I'll move on to Mr. M. Govardhan Rangan from Economic Times.
Good afternoon, Governor. When you mentioned about that we should not be having any knee-jerk reactions, and in future also if there is going to be a kind of inflation perk up, there could be policy measures beyond just interest rates. What did you have in mind when you say that policy actions beyond interest rates?
I think one we have undertaken today, the ICRR, the incremental CRR. So you'll have to wait and see. But one is this on the liquidity front, because liquidity plays a major role with regard to, you know, the inflation on both sides, in pushing up inflation or in controlling inflation. So we have given taken some step today, and we'll see, we'll deal with it.
So just that, so one of the things is that the amount held by because of the Russian trade surplus arrangement, so that is there in the system. So that is how does that get out? And whenever it gets out, how do you really plan to act, and how do you expect it to play out?
No, in the sense that you mean what is held by in the Vostro accounts?
So it's in rupee. So it has to go out somewhere. Okay. So
I think it's become a part of the system. It will be a normal situation. And in any case, any trade relation of India with any country is not a short-term trade relation. It's a long-term trade relation, whichever is the country. So therefore, there is no reason to expect that suddenly a country decides to pull out. Why should a country pull out? It's a continuing trade relation. So therefore, we don't see any stress or any concern with regard to the quantum that would be held in in the Vostro account from various countries.
Give a slight indication of how much of that money is in T-bills?
No, it's not proper, as my colleague Deputy Governor Ravi Shankar said. It's not correct on our part to say which country how much they have invested in T-bills. No, it won't be possible. It's not correct.
Thank you, sir.
You want to add something?
It may not be accurate to think that the trade surplus is staying in the country, because a large part of that is oil, up to the global cap can be paid through the normal channels. It is getting paid, so most of it is getting paid. Some of it could be remaining as rupee balances in SRBA accounts. So don't include the trade balance of 40 billion or something to the amount that must remain within the country.
The forecast or the calculation is somewhere between $10 billion to $22 billion is the wide range in which the market is forecasting. Is the market right anywhere? Which end are they closer?
No, sorry?
Well tried.
No, I mean, it's not something about which we are really unduly concerned. I mean, we are not concerned unduly, because market has its estimates, but so far as we are concerned, it's not going to cause any. And very rightly, he has pointed out, whatever is imported below $60, it gets paid in the normal course. A part of it is there, so which is quite manageable. It's not as if suddenly one day we will be under pressure to sort of take out that money. And today, also, as I mentioned, with 600 billion, reserves, 600 billion US dollar reserves, I think we are far better placed today to deal with any situation. Last year, for example, after the commencement of the war in Ukraine, I mean, there were market fears that, rupee will crash to depreciate to such and such levels, and various numbers were mentioned in the market. But none of that happened, because RBI was there in the market, and RBI is always there in the market. So we are confident of dealing with such situations if at all they arise, but we don't see that happening.
Thank you, sirs. I'll now invite Mr. Ben Jose from PTI.
Good afternoon, Governor. Governor here. Hi. Are you linking, you spoke about the capex and there is room for capex, private capex. are you linking not happening that to the falling rural demand? And where do you look at the rural demand? Rural demand is not something rosy, and many companies say that okay, it's on quarter-on-quarter basis. It is flat.
Okay, then you can reply.
Yeah, it has been muted for a long time, but we are seeing signs of revival. Yeah, and for instance, I'm just drawing from Governor's statement that was just released. He points to tractor sales and fertilizer sales having improved in June. Retail two-wheeler sales growth has become healthy again in June and July. Also, FMCG companies are reporting that their rural sales are improving. And finally, the progress of Kharif sowing, which has exceeded last year's level and is still on course to go further, is a source of income and livelihood for rural economy, and that will boost demand.
Okay. Can I have one more question?
Maybe when we have time.
Okay.
Thank you, sir. I'll move on to Mr. Pankaj Aher from The Informist.
Thank you. Good afternoon, sir. Is the incremental CRR the only tool RBI had to deal with something that does not seem to be a big, durable, long-term liquidity problem? Surely many other tools are available with the RBI. This tool is not part of the liquidity management framework that the RBI itself has set out earlier. Could you please explain a bit more about that? Because I'm sure market is going to be pretty concerned about this. On one hand, there is incremental CRR, which is a potent tool. On the other hand, it is applicable only for past 2 months of NDTL or thereabouts, not on an ongoing basis. And it is 10%. And you're saying even before September 8, you would review. What is the net impact of all of that? Would it not have been achieved better by any other tool at your disposal? Change in yields on VRRR, maybe the SDF temporarily moving up. Why incremental CRR?
You see, we have nowhere said that this is the only method. There are other methods. But at present, in the current situation, according to our assessment, we felt that this was the best, this was the appropriate action. This is the appropriate method at the current juncture. 2,000 rupee notes have come back into the banking system. As we go towards the festival season, the currency offtake, that is the currency in circulation, usually picks up as you go towards the festival season. And this is something which is there in my, I have said it in my statement. So I have nowhere said that this is the only option. This was the best option under the circumstances. We have various options. As and when the situation requires, we will deal with it. And we will undertake whatever measures are there. We have to keep in mind the requirement, and this is again I have reiterated today, that we will ensure that there is, there is enough liquidity in the system for the banks to continue their lending. And so therefore, just hold on. So therefore, why we did not undertake something, that's a part of the internal process. So I think let's not go into that. At the moment, we thought this was the most appropriate action.
Thank you, sir. I'll move on to Mr. Sachin Kumar from the New Indian Express.
Sir, good afternoon. To get more clarity on inflation, I would like to know whether your concerns regarding uneven monsoon, have they eased significantly, compared to what they were in the previous review? And if I may ask also, between the uneven monsoon and El Nino, which one is the bigger concern as of now as we speak for RBI?
I think let Deputy Governor Michael Patra take that question.
Actually, both are concerns for the India Meteorological Department. And they have said that during September, October, they expect an El Nino event. El Nino is not as dangerous for us as it is for South America, for instance. But we need to keep our guard on, because there can be influences on the late withdrawal of the monsoon or extension of the monsoon, as we are seeing in recent years. The monsoon stays on for a longer time and then affects the rabi crop, etc. That's the concern.
Just one clarification here. So this uneven nature of monsoon, is it still a big concern for you right now as we speak?
Yes, the rice growing regions of India, particularly east and northeast, have not received enough rainfall. They're still reporting deficiencies in double-digit figures. So, but that is correcting. Currently, east is getting a lot of rain. So we hope that the spatio-temporal distribution will even out, and we'll have a normal monsoon. So we stick to our assumption of normal monsoon.
Thank you, sir. I'll move on to Mr. Laltendu Mishra from The Hindu.
Good afternoon, sir. According to news reports, the Chinese economy is tripping into deflation. Is it a matter for worry for us, or is there any spillover effect expected on us? Thank you.
Yes, we have also read those reports. Remember that deflation is a situation of declining prices. It's not yet defined as recession, which is declining growth. Recently, the IMF came out with its World Economic Outlook update, and they have taken into account these. This was out in the last day of July. At the time, they had these numbers with them, and they have actually placed China's growth rate at 5.2%, which is a decent growth. And they have gone forward to raise the global growth forecast for 2023 from 2.8 to 3. So all that augurs well for us. In the event, we are now facing a little deficiency of external demand because both exports and imports are declining. But the good thing is that imports are declining faster than exports, so the trade balance is narrowing and becoming financiable.
Thank you, sir. I'll move on to Mr. Anand Adhikari from the Business Today.
Good afternoon, sir. Sir, in June this year, RBI's development research group it came out with a study on the price behavior of three vegetables, tomato, onion, and potato, and they looked at the period from 2011 to 2021, so fairly long period, and the recent, the last 10 years. Now the finding says that if there is a big price change in one of the vegetable, the prices of other vegetable might change in a similar fashion. I just want to know, do you agree with this assessment, or is it purely academic?
You see, research reports are the view of the researchers, but by and large, transmission within this top group does happen if there is persistent inflation in one of them. It tends to get generalized within that top. So there are possibilities that it is. So that's what I have said, that if the inflation, food inflation, gets generalized, then it's a different story and we will have to act. But I think maybe DG Michael Patra would like to add something on the research paper, since...
As you know, the Development Research Group is a combination of an external expert and internal team. So this has been the subject of considerable amount of research. In fact, Governor, when he was Secretary DEA, actually handled this question front on. And he was telling me from his experience that they were playing with whether it should be top or pot or OTP. Okay. I didn't know this at all. But it has been a concern of the government for some time, and some measures have been in place to try to sort of stabilize the supply of these vegetables at this time, pre-monsoon. So let's hope that's work in progress. Let's hope we get there.
And I'm sure you must be factoring in these things in your model, the inflation projection model.
Yes.
These things.
Thank you, sir. I'll move on to Mr. Vishwanath Nair from BQ Prime.
Governor, this question is around the write-offs at banks. Now, there's this 15 lakh crore number that's come out of some RTI reports over the last 10 years. Every bank has always maintained that this is only a technical write-off. These loans are still eligible for recovery, but their history or track record of recovery is abysmal. Is this something that the RBI concerns with itself at all, or is this just a financial decision of a corporate entity?
I think DG Swaminathan will take that question.
Yeah, I think we need to get the context right on this. One is that it's of course long-term data of over 10 years. There are 3-4 key things that we have to be familiar with. One is that once an account becomes NPA, prudential norms require creation of provisions, and basis the aging of the NPA as well as the realizable value of security, these provisions get augmented and reach a stage where the provisions equal the outstanding in the account. So once these accounts become fully provided for, you are carrying an asset on one side and equal provision on the other side. So as a part of balance sheet management and for tax efficiency, the banks, as per their board approved policy, resort to what is called as a technical write-off. So this is number one. Number two is that, so this is purely an accounting entry where an on-balance sheet item moves into an off-balance sheet items. And they are parked in typically what is known as advances in recollection, and there are specialized teams which chase the recovery thereafter. And the key fact that we have to be remembering in this is that the borrower's liability to repay or the bank's right to recover is not diminished in any manner. This is purely a balance sheet management. The third, what you said about as a regulator, yes, we are, the very fact that this is covered in the FSR, and also it was covered in the recent governor's interaction with the MD CEOs of both public sector and private sector banks, is that we would like the banks to redouble their efforts, because these are accounts that are parked in a special account, and we would like to see more and more recoveries because they directly go into aiding the P&L of the banks and then contribute to the financial well-being of the banks. The last point that I would like to submit for your attention is that these are NPAs which are 4, 5, 8 years old, and the realizable value of securities would have diminished over a period of time. So the percentage of recovery has to be seen in that context of the age of NPA and availability or absence of security thereof. So I think we have got to be guarded in terms of passing a judgment over that. But what we are focused is that we would like the bank managements to have a board-approved policy for write-off and also have follow-up on this in terms of maximizing recovery, that we are engaging the banks very adequately on this.
You want to say? Thank you, sir. As we are running out of time, we'll take last few questions, sir, with your permission. So I'll invite Mr. Hitesh Vyas from Indian Express to ask his question.
Hi, sir. Good afternoon. Sir, in April, you issued draft guidelines on penal charges on loan. So when the final guidelines are going to be announced?
I think you can.
I can say in one word, shortly.
Thank you for the short answer, sir. I'll move on to Manish Suvarna from Money Control.
Thank you, Yogesh, sir. Good afternoon, Governor, sir. So my first question is on what is the price of India's crude oil basket that has been assumed by the RBI in the latest inflation forecast? Has it changed from $85 per barrel? And second question is on the liquidity, that how much time does the RBI think that it will take to withdraw the excess liquidity from the banking system? Thank you.
Our assumption on the oil basket has not changed since June. What was your second question?
How much time does the RBI will take to withdraw the excess liquidity from the system, as you have done the incremental CRR, which it is a temporary tool? So
our assessment is that the measure that we have announced today will balance out liquidity. Our intention is not to withdraw all the liquidity, but to leave enough there for credit needs of the economy. So as of now, our assessment is this should do the job, but it's a dynamic assessment, and we will tell you again after September 8th.
Thank you, sir. Last question to Mr. Roisuke Hanada from Nikkei.
Okay. Thank you, sir. Recently, one of the minister of the Japan told a reporter that Japan considered to join the UPI payment system. And could you tell me, if possible, could you tell me about the current situation of the actual discussion and what is the expectation from the other RBI? Thank you.
I think DG Ravi Shankar to take that.
Yeah, we have noted that statement. We are happy that a country, especially advanced economy, is showing interest in the UPI. But at that was the intention. At this stage, it's mostly exploratory and discussions. The international wing of NPCI is talking with the relevant agencies there. So it is at that stage. It's at that preliminary stage right now. Thank you.
Thank you, sir. With this, we come to the closure of the press conference today. I'm sure a lot of hands are there, a lot of questions are there. We'll address them in a different way, in different place. Thank you for coming here, and thank you for the top management of RBI for very patiently answering your questions. Thank you all.
Thank you. Thank you, everyone. Thank you.